Well, to the stock market now, and there was no fizz for investors today with the bounce from the Euro summit well and truly over. For his take on the session, I spoke to Padley from Patersons Securities. Padley, I see the bounce the market got from last week's EU summit ran out of steam today.
Yes, it did, Andrew. The volumes have dropped off as well on Friday. We really thought the bounce might be a change of trend because it was done on volume of over $7 billion on the day in Australia. But today, the volume is down to $3.3 billion, which is well below the average recently, which has been over $4 billion. So the feature of today was a very narrow range. I think we had a 20-point range on the ASX 200, very low volume, basically going nowhere.
Now, looking at some individual stocks now, and I see Perpetual has received permission to lift its stake in casino operator Echo. There's no suggestion, though, that it's going to make a takeover bid, is there?
No, Perpetual's an institutional fund manager, so they are presumably trying to push Packer or Genting, who both own 10%, into making either a bid for the company or at least putting some pressure on them. With 15%, they'll be able to block any bid, so they will be able to dictate or price a little bit for the benefit of all shareholders. They certainly wouldn't be bidding themselves. And it's also led people to think that maybe Genting or Packer will also be given permission to go to 15%, and then we'll see what happens. Either way, it seems to be good for the Echo price, which was up a little bit today.
Now, resources stocks had a good day today after what can only be described as a terrible financial year that's just finished.
A terrible financial year. If you look at last year, everyone's talking about the market being down 11.1%. I think that's the ASX 200. But the truth is, industrials were only down 2%. Banks were down about 2.8%. Property was up 4%. And the resources have led the whole index down in the last year, down over 30%. And they also not only have had the worst returns, they also have the lowest yields. And if you look at volatility, the most risk. So they've been a disastrous sector over the last year. And of course, the question is, so will it continue? You have to assume whatever's in trend at the moment will continue. That seems to be, China is still slowing. The US recovery has stalled. Europe going into a possibly multi-year recession. Things don't look like getting any better very soon.
Now, I notice internet provider iiNet was up 4% today. Is anything going on there?
Well, there may be. There are a few stocks in the sector, in this sort of cloud computing sector we've spoken about before. And Telstra recently made an acquisition in cloud computing, and it seems to have set off some of these. They're all quite small stocks, set off some of them. iiNet's broken a resistance level. It's been in sort of consolidating. That's attracted a bit of attention. It's an illiquid stock, so it can move pretty quick. And there are a few other stocks below it in the same sector. So, yes, a bit of a cloud computing moment in the market as Telstra declare their hand.
Well, it sounds like one to watch. Padley, thank you very much for your time.
My pleasure, Andrew.
To the other major movers on the local share market, Woodside Petroleum shares dropped, the company getting the green light to sell its stake in Browse to Mitsubishi. Financial stocks were also down. ANZ took the biggest fall out of the big four banks. Rio Tinto shot up after announcing it will slash support and service costs. And Coalworks CEO Andrew Farek announced his resignation today, but the company's shares were unmoved. Turning to currency markets, where the Australian dollar drifted higher. And in commodities in New York, oil is $83.70 a barrel. Gold edged up to just over $1,600 an ounce.